Good day, grade 8 learners. I am Mem Sikidi. I'm going to do with you source documents. What are source documents? Source documents are evidence that a transaction has taken place. They are the internal documents that act as tangible evidence of a business deal. They function by giving the bookkeeping process a reference point. A paper trail is created each time a business engages in a financial transaction. The term source documents in accounting refers to this paper trail. The functions of source documents. The business uses source documents to record transactions in the accounting books of the business. Business uses source documents for which reasons? As evidence of transactions, for recording purposes, for auditing purposes. Details of source documents. You must be able to know what is it that must appear in the source document. The completed source document must have all the information that you will need later to make accurate entries in the accounting records of the business. Businesses can make their own source documents called internal source documents, or they can receive it from other people or businesses, and they are called external source documents. Source documents must contain information like date, the nature and type of the transaction, the value of the transaction, and the names of the buyers and sellers involved. Remember, good bookkeeping comes from good record keeping. Different types of source documents that we are going to deal with in grade 8. Receipts, deposit slip, cash register roll, cash register tape, bank statement, cash invoice, electronic funds transfer. And then what are receipts? It is a source document that serves as proof that business has received a certain amount of money. It is issued for money received from the owner, money received as income, like current income for services rendered, and then rent income, etc. It is completed in duplicate, and the business issues the original receipt to the person from whom the money was received. Remember, a business will send the original, not the duplicate. The business keeps the duplicate receipt for recording and future references. I hope you have done this with your teachers. It can be completed manually, by hand, or can be computerized. That is the example of receipt. I think you all know the example of receipt. Deposit slip. It is the source document that serves as proof that money that the business received was deposited into the business bank account. The bank issues the bank deposit slip when money is deposited into the bank account. It is completed in duplicate to authenticate the transaction. The bank teller puts the bank stamp on the deposit slip, issues the duplicate deposit slip to the deposit, and then keep the original. That is the example of the deposit slip. Cash register slip and cash register roll. Those are the examples of cash register machine and the cash register slip. When a business uses cash register, the cash register prints a source document named the cash register slip or cash register roll. The source document serves as proof that money has been received for goods or services bought from the business and paid for by the customer. The cash register prints the slip, for instance, for services rendered or goods purchased on the cash register tape, as well as the money received and the change given. The original cash register tape is released for the customer, and businesses keep the cash register for the daily total sales of that particular day. It is used by businesses which sell a large variety of goods or services on daily basis. It can be used to return goods bought that are faulty to the business. The bank statement. It is a statement that is prepared by the bank which shows a list of all the transactions of the business with the bank. It is prepared on monthly basis, but it can also be prepared on request at any time. The business is always charged a certain amount when the bank statement is prepared. These fees are called bank charges. Bank charges can include EFT fees and internet fees. Sorry for that. It has the following money columns: debit, credit, and balance. Those are the columns that we find in the bank statement. Continuation with bank statement. Debit columns is for withdrawal and bank charges. Credit column is for deposit, and the balance is for the money available in the business account. The bank statement begins with the opening balance at the beginning of the month and ends with the closing balance at the end of the month. Businesses use the bank statement to compare with the business journals, that is cash receipt journal and cash payment journal, reconcile the difference and send those differences to the bank. A cash invoice. It is the source document that shows goods or services that have been paid for. It is normally printed from the computer. The original cash invoice is given to the customer and the business keeps the duplicate. It serves the same purpose as the cash register slip, but the cash invoice explains the goods being bought in more detail than the cash register slip. Electronic funds transfer. An EFT is that electronic transfer of money over an online network. It can be performed between the same bank or a different one. Any EFT transaction will appear in a bank statement. An EFT can be for money paid or received. If you paid money for something, your bank statement will indicate a debit, which shows that money in your account will decrease. And then if you receive money for something, your bank statement will indicate a credit, which means that your account will increase. A proof of payment can be downloaded. EFT can be done via online or cell phone banking. That is all for today, learners. I hope you will be able to remember all what I have said, because your teachers have already done most of the work. And then here is the QR code and the link for quiz questions. Try them, and then I wish you all the best. Thank you.